All right, what's going on, trade engineers? Now, this video I initially posted on Rumble, and I appreciate everybody who watched it on Rumble. But when I posted that video on Rumble from my November 7 FTR stream, I mentioned that depending on the kind of response that I get, that I was going to post a follow-up video about the algorithm that I follow and I keep track of every day. That's been, really helpful with my strategy, right? So I wasn't really clear about that and about what I was looking for. And, it's actually performed fairly well, but I actually want to, I kind of think it could do better. I kind of think we can do better than that. So what I want to do is I decided to bring this video over to YouTube to make it more accessible, right? To make it easier for everybody to watch. And also to kind of be more clear with what I'm looking for, or to kind of create a challenge that'll be the trigger for me to make this next video. All right, so here's the challenge. So I'm going to focus on the number 5 for this, right? And it's because 5 is my favorite number. If you're wondering why I'm focusing on 5. All right, so I'm focusing on the number 5 here. So either 50 likes or 500 views, whichever one of those comes first, that's going to be the trigger for me to make this follow-up video going into detail about this algorithm that I keep track of every day and that I use in my daily trading, right? That's the challenge. Now, the thing about this is, it's probably just as a general topic, it's probably not going to get a lot of favoritism from YouTube's algorithm. So I'm going to need your help, right? The way that we can work together to get this number is you can like this video, of course, as part of the challenge. And you can also share it, which will help a lot to promote the video, and leave some comments in the comment section below. Now, if you don't know what you want to comment, like if you want to engage with the video that way, but you don't know exactly what you want to say, you can just comment with unit we, right? So you can like it, you can share it, and you can comment below. Now, this is the kind of stuff that people usually put behind a paywall. So instead of, I don't really like to do it that way. So instead of me putting it behind a paywall, then I decided this is going to be the best way for me to go about doing it. And so, it's an exchange of energy. That's all it really is. All right, so enough of all of that. Let's just go ahead and get right into the video. All right, what's going on, trade engineers? It's Rob MV3 Trader here. And from this point on, I'm going to start referring to all of my lovely viewers as trade engineers. So you're all officially trade engineers if you're watching this video, and all of the videos from now on, because that's what MV3 Trader is about, right? Helping you engineer the perfect strategy and plan for your trading business, because you are fully capable of designing your trades for the best results, right? The great trades come from within. All right, so with all that being said, let's go ahead and get right into this video. And this video is an exclusive one that I'm going to reveal my predator formula. This is how I was able to address a lot of the fears that I was having. And you know what? Let's just get right into it. All right, so before we get too deep into this predator formula, what is this predator formula? Like, what's the benefits of it? So we're going to start talking about the benefits of it and why I see it as something that's valuable. All right, we got 3 core benefits here. And one of the benefits is it mitigates uncertainty, right? So one of the main reasons that people are fearful, or they struggle to be successful consistently as trading, is because of the fear around not knowing what's going to happen next. So this formula right here directly addresses that, right? So that would be number 2. Because of number 1, you're directly addressing any fear that you may have, right? And also with that, addressing that fear, you're going to be improving your strategy and also the knowledge that you have of the market, right? So you're going to learn more about how this market functions. You're going to understand more about how price moves and what's the typical structure versus what's the abnormal structure and then abnormal price action from coming up with your predator formula. All right, so with all that being said, once you get this predator formula, you have it down for you, you can stay in the game and be fully prepared for whatever the market throws at you, right? All right, so let's go ahead and get into a little bit more about this predator formula. So the predator formula that I've created for myself is universal, but it's really going to be more about you and how you see it, right? So the predator is going to be dependent on your particular strategy. How you define the predator for you and your approach to trading, right? So it's going to be based off of what you see, right? So for me, the predator is those sharp momentum moves against my trade bias, right? That's the predator for me. And this is going to make more sense when I go to the charts. So, let me just explain this, and then we'll get to the charts and we'll get to an example, right? So price simply going against my trade bias is not predatorial for how I've defined it for myself, right? My strategy is not supposed to work all the time. So normal price action leading to a loss for me, considering I have executed my strategy perfectly, is not an automatic indication for the predator's presence, right? So what you see as the predator is going to be totally based off of how you see the market and how you see things. So from there, you're going to start using this formula for whatever it means in the best way that it means for you. All right. So if you're telling yourself, like, consciously or subconsciously, things like, every time I enter into a trade, it seems to go against me. Or maybe you're telling yourself that, your strategy isn't really that good, or it's not good enough. Or maybe you're telling yourself this might be the trade that starts the cycle of my strategy no longer working anymore. Or maybe even telling yourself that your competition is starting to catch on to what you're doing, and they're ready to, take the big strike and, take you out. So I need to be extra careful and have a lot of confirmation before I enter into a trade, right? So these sort of things, they get you out of participating the way that you should be. These sort of thoughts typically result in manifesting what you're trying to avoid. And this is because with you being so focused on the negative side of things, you actually create the environment that's going to bring those bad things into the reality, right? So generally speaking, you get what you focus on the most. So once we're able to identify the predator, we no longer have to worry about the predator movement, because we're going to build a strategy and we're going to adjust our strategy to be prepared for whenever the predator shows up, and we will be able to survive the predator, right? So what to know about the predator is, however you feel about the manipulation that goes on in all markets, it's best to just neutralize your view on it as soon as you can. These things, they just happen, and because they just happen, it doesn't really help to get upset about it. You just need to be prepared and capable of surviving. So some tips to help you neutralize it: consider it as paying taxes to the market, or like a membership fee for, like, a membership fee that you would pay to play on a golf course. And you prepare mainly by taking advantage when the predator is at bay or is dormant, right? So whenever the predator is not around, that's when you really want to hit it, so that when the predator comes back around, then you're able to use all the profits that you made when the predator wasn't around to survive the predator's movement. And then once the predator's gone, you can get back at it. And another thing that helps a lot is to prepare by coding it into your risk management plan, right? So your risk can be structured as something that's fixed, whether the predator is active or not, or it can be more of how you respond when you become aware of the predator's presence, right? So you want to have it inside of your risk management plan that you're already prepared for the predator. So whether you have like that as a fixed number, like you're just going to have your stop loss at 5 or 10 points, or maybe it's something to where you're, all right, I see the predator, so let me go ahead and initiate this part of my risk management plan, right? It's all about being prepared. Okay. All right. So here it is. Here's the moment of truth. Here's the formula here. And it's really simple. It's just R equals 1x. Okay. So it's simple. You just need to figure out on average how many times the predator shows up in regards to your strategy versus when the strategy is free and clear of the predator's movement, right? So it's all about cycles. This formula is all about cycles. Okay. And the predator cycle is going to happen whether you're participating or not. That's the key to understand, that this predator is going to show up whether you're actively participating or not. Also, it's key to understand that predator movement is more than you just getting stopped out, right? It's normal to be wrong on the play in relation to your strategy, but this predator movement is more of that anomaly that disrespects the most likely scenario or the typical, structure and price action, and it takes advantage of you and everyone else unless you have some sort of inside information or you're able to develop a strategy that takes advantage specifically of the predator. So I'm not going to get in, that's possible. I'm not going to get into all of that in this one. We're just going to keep moving along with the actual predator formula. So the whole purpose, like I said, with this formula is you need to be able to survive whenever the predator shows up, and then when the predator goes away, then you're able to start back growing your account again. You're able to get back to your business as usual, and you're able to get back to making profits inside of your trading business, right? When the market is in its normal flow, the movement that helped you develop your strategy, your strategy should be profitable. All right, so let's get into a quick example. I'm not going to take a whole lot of time on this example, but this is perfect because Friday gave us the perfect environment that I can show you this predator movement. And just so that we keep it, front of mind, I'm going to put the formula right here. So what this tells me is the R stands for risk, and then the 1 is the predator compared to X. And X is how many times you get the normal market cycles or your normal structure that you can take advantage of, whether you win or lose a trade, right? So what we're going to look at is we're going to look at this area right there. All right, so you can see we had like pretty decent action, then we got a volatility spike there, right? And then we had a little short rally here off of that volatility spike. Okay, so this would have had, in this scenario here, my trade bias would have been long, and this is just for me, right? So however you look at the market, again, the formula is going to be based off of your strategy and your plan and how you go about trading, right? So for me, this area right here, this was my predator, okay? And I would have been long biased up here, and it would have just completely flushed on me if I would have took the trigger, right? Which I did, but it would have it just completely flushed on me, and then it didn't really give me any good movement to where I could have my normal style of trading, right? So that's where my risk management plan was key. If you look at the live stream from Friday, you can see I kind of messed that up. But at any rate, this is my predator formula. So since I have a long trade bias here, that means I'm trying to buy low and sell high for a profit. The predator movement was right here, and then it ended. And then we got back to what I would consider normal trading or a normal structure or normal price action for my strategy, right? Even over here. So over here, what about this? This area right here, this is not predator movement for me. And for me, it's because this structure here increased the probability that we were going to completely, that we were going to continue selling off at least back to this inventory zone down here, right? So in this box here, this was not a predator movement because it actually gave me something that I could really trade normally. And there was a signal that we got that indicated that we were likely going to, sell off back down within this range, back down to the inventory, the main inventory, right? And then the market gave me some normal structure that I could trade in profitably. So how I would do this, I would need to make sure that before this moment, I should have been trading my strategy as best as I could and profiting when I was supposed to profit. When this showed up, based off of my risk management plan, I should have been able to survive this predator moment, right? This predator movement, the presence of the predator, and then I could have made money on this end, profited again, right? Went through my normal trading cycles through here, which I got the indication that we were probably going to keep selling off. And I would have maybe taken some losses, but it would have been easier for me to manage the risk in all of this. And then I could, still hitting it hard if I wanted to continue trading. I had a lot of opportunities to increase my capital and build my cushion in this movement and the movement throughout the rest of the day for the next time our predator shows up. Okay. So that's the predator formula, right? I hope it helps you. If you have any questions about it, or anything like that, comment with all your questions and all of that stuff, and I'll see you on the next one. Trade it easy.